This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Friday, thank God. We're coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant, with me, my colleague Surabhi and Nigel. Guys, hi, morning.
Hi, morning, guys. This morning when I woke up, my son just asked me, Papa, it's raining enough today? I said, no, it's not.
Schools are open, so it's time to go. But what a spell we've had, right? Absolutely continuous. And I think there's something to talk about over there. I don't want to start off on a somber note because it's Friday, but yeah, I think on the agri side, there are a lot of questions already being raised on the next cycle, the next crop cycle, with the kind of incessant rainfall that we've had. But it's Friday, so
for now, I'm looking for the sun, Surabhi. I mean, just the side of the sun. I think it just lifts your spirits, right?
Yeah.
Been missing for the last 1 month or so. So let's hopefully today's the day. Anyway, we'll talk about the weather as we go along, but let's quickly tell you what you need to know as we start another trading session. And it's a somber start this morning. And for a bunch of reasons. Things seem to be getting a little complicated. And I'll tell you why. First is the US market reversal that we saw. The markets were cruising along nicely, the main big US indices. And mid-afternoon or so, they started selling off. And it was that's why I'm saying it's a big major reversal. And especially, pointing to the fact that we reversed from fresh 52-week highs. So that's not a good sign, never a good sign. Now, the changes will come up on your screen. The S&P down about 0.64%, the Nasdaq 0.5%, Dow was down about 0.6% as well. For the Dow, it basically finally broke those 13-day winning streak. The 10-year, actually the cue or the trigger for the stock sell-off did not come from, stocks. Earnings, etc. were okay. But it came from the Treasury market, yield market. The US 10-year yield shot up 13 basis points to 4%. Consequently, the dollar also reacted. The dollar was up and it's back above the 101.5 level. It left off at 101.67. The trigger is this. Nikkei, which is a Japanese newspaper, it basically said that the Bank of Japan is going to discuss allowing long-term interest rates in that economy to rise above the 0.5% curve, what you call YCC, yield curve control. So basically, they're now talking about, the newspaper at least is suggesting that the Bank of Japan will get out of its trying to control the yield curve, trying to control interest rates, trying to keep it low. And that really triggered the move. We never really stopped. So yields were going higher on the back of strong data, which we can talk about later. And this particular news item, which is out of the Bank of Japan, that further pushed yields higher. And that's why you saw that 13 basis point higher close. Now, Bank of Japan is one of the last central banks, is the last major central bank, without a doubt, which is still in, a monetary expansion phase. Even though inflation is back after almost 30 years in Japan, the Bank of Japan, because it's been so expansionary for so long, at least 10 years, it's found it hard to take its foot off the pedal in terms of monetary expansion, easy monetary policy. If this were to happen today, the Bank of Japan meeting is today, I think it'll mark a significant shift. They can't do everything together. I mean, it's impossible. It'll be a slow start, but the direction then will be clear. So that's the reason why I'm saying that perhaps the meeting today and what comes of it, if that newspaper report is correct, markets paid attention to it, but we'll know shortly whether it is correct or not when we get that Bank of Japan decision. Okay, so that's, the global stuff, which will be important to track. Because markets have done so well. Everywhere markets have done so well, and sometimes it requires a trigger, one way or the other. For the Nifty, just to kind of get it down to levels, the support is 19,620. The same number we've been pointing for the last couple of days. Yesterday, we broke it intraday very briefly, and then we bounced nicely above it. The 20-day, I think, will also perhaps come into focus, which is at 19,555. It must not break for the up move to sustain. Remember, since we started this rally on the 31st of March this year, since April basically, the Nifty is not closed below the 20-day moving average. That number now is at 19,555. So hopefully that holds. Now, the Bank Nifty support comes in at its 20-day moving average, which stands at 45,300. 33. So, again, not very far away from where we are. So we'll have to watch this closely. The implied open on the Nifty, the GIFT Nifty is indicative of a lower start, some 70-point lower start. Surbhi.
Okay, so that's some red to begin with. And Prashant, like you're saying, I guess everyone did sort of take note of that halt that we had in US markets. It was, I think, a 13 consecutive days of rise, which finally came to a halt. So we watch out for that. By the way, in the US, we'll get the PCE numbers as well. And that's the inflation metric that the Fed really likes to track very, very closely. Core PCE is expected to go up just about 0.2% month on month. So again, Fed watchers will go back to looking at that number to see if they're really done with this last 25 basis points rate hike or not. The ECB went ahead and did a 25 basis points rate hike yesterday, and that was well digested, at least by the European markets. So central banks are doing what they have to. By the way, oil has been grinding higher throughout this week. This morning, prices are slightly lower. Brent is down about 0.5% right now. But for the week, the gain is 5%. And we can't ignore that. Almost 84 on Brent. So that's a big cue for us here in India. And it's a negative cue. To add to that, in terms of the earnings season, we've had absolutely no positive outlier, no sparkler of an earning all through this week so far. It's been either in line with a little bit of a sell-off because stocks have already run up, or, niggling worries and negative, for instance, Tech Mahindra. So as Prashant also mentioned now, just to recap, 100 points away from the 20 DMA on the Nifty, about 350 points away from that level on the Bank Nifty. So we watch out for those zones carefully. Yesterday, we had a lot of selling in the cash market. FIIs have sold off stocks worth almost 4,000 crores. And the net inflow from domestic institutions was only 2,500 odd. So the net sell number, it turns up quite a big number because of the FII selling yesterday. And it's quite clear that while there's a lot of stock-specific action going on, the market is facing headwinds of leadership. There's a lack of leadership, really. If you just look at what's happened this week, you've got the FMCG index falling 2.5% because of all the earnings that we've got. The Bank Nifty is down about 1%. The IT index anyway was falling. It's never been much of a support in the recent past. So, those are the downers. Look at the sectors that have actually done well. Pharma, 4.5% up. Real estate has done well. And obviously metals, thanks to all the China talk. But these indices don't have much bearing for the index in terms of the weightage. So they don't really count. The bigger boys, your banks and IT, they have been underperformers, and that's been the problem for the market. Today, again, we're back to looking at results. I'll actually watch out for M&M Financial Services beyond just the numbers. Let's see if there's any interesting Q&A on this stake sale that they've done in RBL Bank. So that's an interesting one to watch out for, and the others as well, Bank of India, IOC, some of the others on your screen. But otherwise, index, not much so far this week, Nigel.
Well, that's right. So we got a troika of problems today. The yields are at 4%, the US bond yields. You have the Brent crude prices that are holding at around $83.50 per barrel. And the dollar index, for reasons that we just mentioned, are at around 101.7. So a troika of problems today. But the Nifty, it registered its fourth straight winning series. And now it's got its eyes on the fifth. Will that happen or not? Well, we'll have to see. And remember, this has not happened since mid of 2017. So it's been a while since we have had, 5 straight series. So history as well will be against actually the bulls. Now, those are the last few series been very, very good. 400 to around 800 points is what we have gained. But what does August hold in store? Well, we'll know in the coming month or so. Now, in terms of Nifty open interest at the start of the series, rolls have been higher, and that's why the Nifty open interest, it's relatively much higher in comparison to the average of the last 3 series. So it's more than 30% higher, the total open interest out there. The FIs, well, the long positioning has come down. They've added some shorts in the system as well. So we're starting the August series with the long positioning at close to around 59% odd. And the net long positions, that's the long minus the short, well, that's at around 33,000 contracts. The gross long positions are very high, but now there are some shorts in the system as well. Looking at the options data, you have the highest open interest at around the 19,800 put as well as call. But the PCR at this particular strike is at around half, 0.55. Because the number of calls that are written are far more than the number of puts written. And that should come up for you at around the 19,800 call. The total open interest is more than a crore shares. So that's telling you that the call writers, they have this confidence that at higher levels, we're not going to be going to those levels, maybe 19,900 or thereabouts. Which brings us to the levels. That becomes a resistance zone. Since the 19,800 call has a fair bit of open interest, 19,880, 19,900, that's a resistance zone. On the downside, the 20 DMA, which is 19,555, and yesterday's low, which is 19,604, that becomes a bit of a resistance zone. We're going to start off in the red and closer to around yesterday's low, We'll have to see whether or not we can hold that. The Nifty Bank as well. That did see a bit of a downtick yesterday. It's close to 300 points away from its 20 DMA, so I'll be watching that level as well. Implied start is in the red. Let's see how this goes from here. But we've, the bears will be feeling quite good going into today's session.
Oh, yeah, and we really have to watch for some of these levels that you also outlined because we're very precariously close to them. So let's see, today is going to be an interesting one. Let's start up with the equity call of the morning. Rupal Agarwal of Bernstein says that momentum has not been a successful strategy in India this year, and only parts of the trade have worked. She says stocks showing high earnings momentum have been rewarded, whereas chasing stocks with the highest price momentum has not worked. However, she adds chasing earnings momentum now looks vulnerable as it has reached a +1 standard deviation, that's 1 standard deviation level above to its 10-year average valuation and near peak earnings upgrade cycle. Some caution coming in there from Bernstein.
Well, let's get you some money market views as well. This is Lakshman and V of Federal Bank, who says that the Fed and the ECB raised their policy rates to decadal highs, impacting the US dollar index as all the G7 countries were trading up against the dollar. He says the Indian rupee is caught in the midst of persistent dollar inflows and forex reserves related bids. He expects rupee to be in a range of between 81.63 to 82.28 for the next few trading sessions.
On bonds, Lakshman says that the FOMC was on expected lines with no clear indication of the Fed's next policy move. He says our domestic inflation reading could be higher on account of higher food inflation, and with no rate cuts in sight, our bond yields have been inching higher. He says coming sessions could see the 10-year benchmark bond yield trade in a range of 7.08 to 7.15%.
Well, we have a lot of stock-specific action to track for you. We'll get to that in just a bit in our special Top 10 segment, but let's run you through the list. BEL, ITC, Indus Stars, Sona, BLW, Macrotech developers, all the stocks are expected to open up in the green. Add to the list Ajanta Pharma and Shyam Metallics. On the flip side, we have Supreme Petrochem as well as JK Lakshmi Cement that will open up in the red.